Hi, I'm Shae Russell, editor of the Daily Reckoning Australia, and I'm here to talk to you today about wage price growth in Australia. Now, yesterday, the Australian Bureau of Statistics released data saying that wages grew by 0.6% to the December quarter, giving us a year-on-year total of 2.1%. Sounds like good news? Kind of. Of course, it's good news that we're making more money, but what it did lead to was a bunch of newspapers coming out saying that they expect this makes the case stronger for the Reserve Bank of Australia to start raising rates. I don't actually think that's the case. Now, here's why. The jobs growth shouldn't be completely surprising. The economy, based on official statistics, of course, says that we added 400,000 new jobs last year. So that's a fair bump. That also brought the unemployment rate down to 5.5%. However, if you drill through the data, you'll find out that the the new jobs that were added last year, over half of them, around 200,000, were actually government-based jobs. Now, of that half, 3/4 of them were in the health sector for the government. So a lot of those new jobs that were created were for, obviously, hospitals, teaching roles, but also too for the NDIS, our new disability insurance scheme. So what that means is we've seen these huge job numbers come in, but it's probably a one-off and it might not be repeated. So unemployment data probably isn't going to look so rosy in a few months from now, which means that our wage price growth isn't going to look as rosy again next quarter. But does this mean the RBA is going to raise rates? Probably not. In fact, as you'll hear from me, I'm going to make the case over the coming months that the RBA will probably be cutting rates by the end of the year rather than increasing them. Philip Lowe, the Governor of the Reserve Bank of Australia, has said that they're not going to consider raising rates until they see year-on-year annual wage growth sitting at around 3.5%. Given that we're still at 2.1%, we're a long way from reaching that target, and it's probably we're not going to hit 3.5% wage growth anytime this year. Now, wage growth, or the lack of it in Australia, is a very complex topic, and it's not something that can be explained in a short 2-minute video, but it is a topic that I'm going to write about next week in the Daily Reckoning Australia. Alternatively, make sure, or if you want, leave a comment underneath, and I can see if I can try and address your comments about wage growth and where I think they're going to go and what's happening over the coming few months. Thanks for watching.